Property Unfiltered. Real investors, real stories, the good and the bad in property investing.
Hello everyone, Grace Ormsby here. Welcome to an absolutely exciting brand new podcast, Property Unfiltered, real investment stories, unfiltered, raw and uncut. I am here with Housefinders Simon Loo, the brains behind Property Unfiltered. Simon, welcome.
Yes, thank you. Thank you for having me. Super excited for this new show, new joint venture. I thought it's really interesting to create a show where we just talk about, real stories, real results from myself and from some of the guests I'll be having on the show as well. Just talk about things that happen in real life when it comes to property investing and how to build a portfolio and get people to achieve their goals and passive income and so on. So definitely excited. First show.
It is very cool. What was your motivation for going, I need to tell these stories?
I just feel like there's a lot of grey areas out there in the property space at the moment. Everyone's got their own sort of take on what being a successful property investor is, or how to have different strategies and all that kind of stuff. And the bare bones of it doesn't actually change, the basic fundamentals. And I feel like that just doesn't get talked about a lot. People tend to be very reactive when they're sharing, property tips or stories or whatever at any point in time. But over the years, as I built my portfolio and my guests as well, a lot of things stay constant, and I think, perhaps overcomplicating property investing is something that's happening too often at the moment. Yeah. So that's the kind of motivation behind just having some real talk, really.
Well, for all the people who are listening in, what can you promise them over this podcast series, Property Unfiltered?
Just no BS, to the point. Real life scenarios, real case studies. The people, including myself, that I'll be having on the show have built large property portfolios for themselves and they found success. So, it's straight from the horse's mouth, I guess. And we'll be talking about good and bad things, not just all the great things that happen out there, which, again, is something that just gets focused on a lot. And there's a lot of bad stuff that happens, as an investor or whatever stage you're at. So we'll be talking a lot about that stuff as well.
Love it. We were talking off air about what we were going to be covering in this episode, and given it is your guest, I'm going to get you to intro them in just a second. But before we do, I feel like I need to give everyone the heads up that today we are talking about the origin story. We're talking about the start of Housefinder, the beginning of your investment journey yourself, and talk us through who you've brought into the studio and where this story kind of started, because I feel like that is the best kind of insight to begin with. Yeah,
definitely. Look, I had to think about who has probably been the most influential person in my property investing journey to date to kick off the show, and it's definitely my good friend Michael Xia. Who currently is a mortgage broker at Mortgage Channel. But prior to that, when we first started our property journeys, we were both working 9 to 5. We had goals and aspirations to quit our day jobs, and we found each other actually on Property Chat, which was an online forum where obviously people would just talk about property and stuff. And I noticed he was buying a lot of properties in the same areas I was buying in. So I reached out to him and said, hey, let's catch up. And then we caught up at some dingy Chinese restaurant. I remember we had dumplings in Chinatown.
This sounds like the start of a romantic story here, doesn't it?
Yeah, property romance for sure. But yeah, no, since then, every time we would just meet up every now and then and talk about what we're doing, what kind of properties we've bought, and, how we're progressing to get to our goals. And yeah, very, very happy to have Michael here for sure.
Thank you for having me on the show. It's crazy. I was thinking in terms of which year it was. I think it was 2015.
Right, okay.
I think it was 2015 when we first reached out. And I put a post up on a forum called Summersoft. It was Summersoft back then. And Simon reached out. And when we first started chatting, it was like a brother from another mother.
Yeah,
like,
totally.
We just had the same mindset in terms of properties, the same approach, buying similar types of properties. And we also had the same aspirations. So like for us to be sitting here 8 years later down the track,
Yeah, I know.
compared to where we were and what we were talking about back then,
Yeah.
like you just pinch yourselves as like, can't
Yeah, it's
even
very
believe
surreal.
what's happened in 8 years.
Absolutely. So, I mean, so much has happened. Like, I was working at Luna Park back then, not as a clown, but one step below that, I was in sales. I would fake these sales calls, to go out and just meet with Michael and just talk property, because that was always the goal. Like, we weren't in our jobs, to get the paychecks per se. We were just there as a catalyst to buy more houses so that we could quit the job. So it's really good to have someone just like right beside you as you're coming up, and you bounce ideas off each other, because truth be told, buying and owning property, especially lots of properties, is mostly like there's a lot of headaches, there's a lot of emotional and a mental toll as well that comes with it. So I guess just having someone there as a bit of a support person to kind of G you up every time something bad happens or whatever, even though you might not talk about it specifically, I guess it's like, okay, this guy's just keep going, I'm going as well. So yeah, that type of thing. So
Well, funnily enough, when Simon talked about catching up, I love catching up with Simon because he would always pay for lunch.
Oh, right.
Well, not him, but Luna Park paid for
there we
lunch.
go. Actually, Luna Park better not listen to this. I might get in trouble.
No, I love this, and I love the fact that there was that similarity from the get-go of how you guys wanted to approach it, because there's obviously since then been a divergence in your paths, not necessarily in your investment journeys. I'm sure they've sort of, followed each other through the years, but your career path since then. And we're going to get to that. But before we do, talk to me about the mindset that you did have back in 2015. You've talked about it being your job was to pay for more property. But what was the long-term goal and the thinking back then? Because I am very curious to see whether that mindset has changed over the years.
Yeah, absolutely. Michael, do you want to comment on that first?
I think for me, it was growing up, and then also just there was always things that I wanted to achieve and do, but I was on a career path in terms of I was in market research, and the salary was somewhat capped at 80,000. And looking at where my managers were, I knew if I continued down that role, that would not get me to where I wanted to be. And it was through a series of fortunate events that I kind of fell into property investing. But for me, it was always just a path of going somewhere where it was better than where I would have ended up. Now, the thing is, when I first started property investing, there was absolutely no guarantees that it could work. And I think being friends with Simon definitely helped that, because we were going down this same path. But outside of that, my close family, friends, school friends, no one was into this. It was almost like taboo.
Yep, exactly the same.
And if even there was a small, say like 10, 15% chance of property investing getting me to where I wanted to be, as opposed to being my corporate career, which was essentially 0% chance, then I would take that risk. So going into property investing was always with an aim of providing for my future family, for myself, a lifestyle that was better than what I would do otherwise. And then eventually it just kind of built on from there.
Yeah, no, I can definitely resonate with that. Like, I, grew up, working all these kind of sales jobs. Luna Park was the last job, 9 to 5, that I ever had. And my entire sort of 9 to 5 working career was my only focus was, how am I going to get out of this? Because like I wouldn't say I'm a lazy person. Definitely not. I work 3 or 4 times harder than what I used to now. Interestingly, once you get financial freedom, quote unquote.
Once you're doing what you actually enjoy doing.
Yeah, exactly. You just kind of keep going, but you run your own. You run your own race. So, working 9 to 5, I was just going, okay, what do I need to do? Read these books, found out about passive income, made a bunch of mistakes initially. And every time I got a new job, or every time I went to work, woke up in the morning, 6:30 a.m., put on my suit, went to work, like all I was thinking was like that motivation constantly to go, okay, I'm doing this for one reason. And the reason is get the next property, get one step closer to passive income. And yeah, glad to have someone that was I guess shared a similar journey.
Yeah, and it was almost like our dislike of work that fueled us to keep going.
Yeah.
And I still remember like my 14th property settled, and on that day I handed in my resignation letter, and
Nice.
it felt so freaking good.
I mean, it sounded like you almost bonded over the fact that you both hated work
Yeah.
so much, but you liked the lunches provided by Luna Park.
Yeah. I had to let that. It was a sad day when I quit my job. That was actually thought crossed my mind. I can't get these free lunches anymore. So it's interesting what you value at whatever point in time in life.
So what then? Well, how long had both of you been investing before you did become friends? Because obviously there had to be some of that background. If you were looking at each other going, oh, he's invested in the same place I have, you're a little bit, you've established that portfolio.
I think I was like 4 or 5 properties deep, at that point. And we found out we were buying in a very similar area as well, which was Logan in Queensland. Back then, everyone crapped on Logan. It was one of those areas where, and bizarrely, like if I look back now, even so, like property experts or people that we would have looked up to would say like, oh, Logan's a bad place. It would never go up in value, this and that. But, and that's another thing that, in hindsight, it was really good to have that kind of person going, okay, this guy's also going hard in Logan. I'm not alone. So we just kept going and buying
There's
all
some
these.
method to my madness.
Yeah, 100%.
Because someone else has the same method.
Yeah. So I think that's, for me anyway, I think I was about 4 or 5 properties deep.
I think for me it was I started investing seriously or taking it more seriously in 2013. So it would have been 2 years deep into my journey that, we had not many runs on the board, but a little bit of a runs on the board, and we could see it leading somewhere. And I think that meeting each other just kind of fueled that confirmation that, oh, okay, if he's doing it, then I'm doing it, then maybe this is the right path to go down.
Yeah, totally.
Yeah. And funnily enough, a side story, my son is called Logan because of what Logan has done for us.
Really?
It is.
Wow, you took it that far.
Yeah, I took it that far, yeah. And luckily my missus agreed to the name.
I mean, I do have to say, like, this is also a side story. My mum's maiden name is Logan. So
Oh, wow. There we go.
Great
There we
name.
go.
There's a lot of threads going through here. That
Correct,
is why it's the origin story.
That's right. Well, funnily enough, when non-investor friends ask, I'm like, yeah, Wolverine, X-Men, love that.
Yeah.
But for the property investors, they don't know the real reason.
Yeah. Lucky we didn't start investing in North Sydney or something. Like.
Oh gosh, imagine there could have been some pretty interesting. I mean, do you have any other kids? What are their names?
Zoe.
Zoe. Okay, I don't think there's a
normal.
Zoe,
No.
but it is a beautiful name.
Yeah, no, but that's how we began, and the transition was natural as well. Like once you get to a certain point, you just kind of go, okay, I've quit my job. Now what? So yeah, that was the next part of the journey, I guess.
So when did the job quitting happen? And did you chat with each other? Because a lot of people, that is a massive step to go that one step further from I'm a property investor on the side. This is my 9 to 5 to this is what I want to do. And this is now my career. When I've been doing it already, I've been able to manage doing it as well as a job. So what's the catalyst for then going, no, this needs to be my job?
Well, for me, you romanticize the idea of, financial freedom and quitting your job, right? Up until the point you actually do. And then you realize it's not as sweet as the build-up, because once you have the opportunity to not have to work, quote unquote, financially, working isn't that bad. I think it's the notion that you're being forced to do it every single day and to get the paycheck so you can pay for the rent and the bills and this and that. That's the part that kind of, is more soul crushing, if that makes sense. And then for me as well, I think the journey of getting myself to that point where I quit my job, not only do I get have I got a lot more confidence, I know a lot more about property investing. And the team of people around me, including Michael, who was and still is my broker, you kind of just think, okay, cool, that box is ticked. What's next, right? And then for me, it was kind of like transitional because when I got to that point of quitting my job, coincidentally, I ran out of borrowing power, so I couldn't actually borrow any more money.
You timed that really, really well.
It was pure coincidence, and I was somewhat addicted to finding deals. because my whole thing, if, people have listened to my story, is all about finding bargains and finding deals for me to buy property and get equity out and move on and so on. I became super addicted to that process, and I saw all these deals coming through that I couldn't buy for myself. So I thought to myself, okay, cool. How do I make this? How do I not just waste these properties? Because I knew every property that came across that I saw had potential. I could make 50 or 100 grand equity pretty much immediately because we were focusing on mortgagees, divorce sales, all that kind of stuff. So that's when I actually came here, for my very first podcast many, many years ago, and did a show, and I was on a magazine as well called I think Property Investor, Australian Property Investor, where magazines used to exist. And
back in the bad old days.
Back in the old days, yeah. And I had a lot of people reach out and say, hey, Simon, I heard your story, I heard your journey, I want to achieve something similar, and, can you help me? So I kind of just married the two together and it started this whole thing, and it's been running since, yeah.
House Finder.
There we go.
The origin story.
There we go.
What about you, Michael?
So mine was, there was a period where it was similar. I mean, you get addicted to buying properties and you want to acquire a number of properties. And I still remember having this chat to my broker and also my mentor. I was like, how can I continue buying properties? And he says, well, you have to increase your income. And it's actually a similar question that I have with some of my clients because they ask me the same question. And when he asked me, how do I increase my income? I'm like, my income goes up 2-3% every year. I'm not really sure. But then at least he planted that seed in my mind that I needed to look at my income. And for the next year and a half, when the property were accumulating in the background, that was a constant question I was asking myself. And I did think, maybe I'll go down the BA route, get my real estate license, maybe even go as far as getting my builder's license so I could be a bit more involved in the industry. And then after a while, I just realised that I should become a broker, and it was because of what my broker had done for me. So throughout the whole process was quite planned. So every single purchase I knew it was getting closer to the end of my borrowing capacity, but it was also getting me closer to becoming a mortgage broker. And then when I did hand in that resignation and quit, I actually packed everything in the car that I have, and then I drove up to the Gold Coast, and I worked from my mentor's office for the 2 years to learn the trade.
Really?
Yeah, so left everything behind here. And then those 2 years were some of the best times that I've had. And funnily enough, there was a bunch of other brokers that did the same thing and also worked from his office. So we kind of had this band of brokers going, and we will literally just go to the office, work, come back, sleep, go to office, work. And it was a very hard period, but it was also very, very cool.
How many properties deep were you both when you did, when that light bulb went off in your head that I need to do something differently, or I'm never going to change what I'm doing?
I think it was around property 5-ish that I started to realise, hey, this could lead me somewhere where my day-to-day job couldn't. And it was off a renovation, actually. So 2013, I bought a property in Newcastle, suburb called Gateshead, and I picked up a 2-bedroom house there for $195.
Those are the days. Gateshead now.
Correct. And we put a 30K reno into it. So all in around about 220, 230. And then within the space of 3 to 4 months afterwards, it got valued at 290. And I'm like, there's no way I could have saved 60,000 through my work salary. And then that's when it kind of, the light bulb moment hit. I'm like, I should really, really focus on this. And that's when things then started to kind of progress forward. So it was around property 5, and it was at property 14 that I quit work.
Yeah. Simon.
I mean, to be completely honest, it was a bit of a blur, up until, I quit my job with 12 properties. But similar to Michael, throughout the entire journey of, I think probably after my 3rd or 4th property, I started realizing that, every property that I was buying, usually about 6 months, I was pulling out more equity than I was making in my salary, almost for the entire year. So I thought to myself, if anything, just buying the right property is already a second income. I was making more money just focusing on buying property. So I think I was just fixated on building more and more and more and more and more. And I think the turning point really was when I believe when I got to my 7th house, I actually sold one of the first houses I bought in Western Sydney. And the profit I made from that property immediately paid off 2 houses I had in Brisbane at the time. When I say paid off, I had these offset accounts set up, and you put the cash in the offset account and it offsets the loan. So effectively, I'm paying no interest. And then just with 2 properties paid off, I was getting, I don't know, $700-800 a week, net of passive income. And I thought to myself, hold on, that's like half my salary income already. If I just did this again, which wouldn't have taken a very long time, that's my entire salary replaced. So I think it's just a case of like realizing, okay, focusing on accumulating, focusing on buying the right deals, definitely, and getting yourself to a point where, you could have that choice is like enlightening, I guess.
Was it something you discussed with each other?
Oh, all the time, I reckon. Yeah, every time we met, where are you up to? How are you going? Probably a little bit of a competitive.
Who's going to quit their job first?
No, he did first. He did it first.
100%. I am absolutely. I wouldn't be where I am today without Simon.
Yeah, same.
And it is a little bit of, it's that healthy competition. But it's also just learning from each other. We'll bounce ideas, talk about to Simon. We'll catch up every month and just say, hey, where are you buying? What are you seeing in the market? Those types of conversations. But it's more so just having a group of friends around you that are on the same path. Because, outside of my property friends, outside of Simon, the conversations are very different.
Yeah. It's almost taboo, You talk about property. It's like you talk about property to non-property people, and it's like you're being arrogant. It's like boasting. Oh, how many properties you have, how much equity you made, this and that. But yeah, with like-minded people, I guess it's not. You just share ideas, how to progress at the end of the day.
But it's also like a mindset thing. Like you'd speak to people that aren't into property. It's like, oh, don't you have enough? Like you should be comfortable. Those types of things. Yeah. But they're also not that happy in terms of going to work, having the same thing over and over. So.
Yeah. I don't know. It is. I think it is one of those things that, I can't. The people that I talk to now on a daily basis come to me, and they're very motivated to get passive income. I ask them the first question I ask to anyone I speak to: what's the goal? They come to me and say, "Oh, Simon, I'm interested in buying property. I want to bet, for capital growth." And I'm like, "Okay, cool. That's great. Everyone wants capital growth. Nobody wants to buy property for it to go backwards. But in 10 years, let's say you own a bunch of properties and they've all done extremely well. What do you want out of it?" And that question, I don't think a lot of people actually think about, because all they're thinking is maybe they just want to buy property to keep up with their mates who recently bought a property, or maybe they think it's like the right thing to do. But when you kind of steer people to the direction of what they actually want to achieve, or what they can achieve, whether it is passive income or financial freedom, or for a lot of people, it's about having enough money to buy like a dream house somewhere. That why, or that reason, is what's going to enable you to formulate a strategy and also progress consistently towards that goal. Otherwise, from what I see, a lot of people tend to fall over around about the 3 to 4 property mark, because that's when they think to themselves, oh, this is great, I made a little bit of money, but it's not worth the headache. Or, they run into some serviceability issues, and they can't borrow, but, they can, but maybe it might just take a little bit of a shift in their lifestyle or whatever the case may be. So that extra little bit of push, or that extra little bit of what's needed to progress, really comes from something more than just, I want to get rich, I want to make lots of money. So I think, both you and I, Michael, we've always had a very defined goals, I think, very defined whys, and very important reasons as to why we want to create wealth, really.
Yeah, 100%. And also it's like, say property investing too is not beers and Skittles. It's not like, you just put in some money and then more money comes back. There's a lot of headaches. There's a lot of issues, times that you would want to quit property investing. And like I say to investors that are starting out, like you might get lucky on your first 1 or 2 properties and it's seamless. But if you keep going, eventually something will blow up in your face. And if your why and what you're doing this for is strong enough, it'll help you get past that. But a lot of people, they might not have a strong why or just looking to make some money. They'll come across that point, and because they're not making money, then they'll give up. So that's why having a strong why, and it sounds so cliched, but it is actually very, very important. And it's probably one of the key reasons why I see some investors succeed and some other investors kind of fall short.
Yeah. I mean, maintenance, tenancy issues.
Property is getting trashed. Like,
Yeah.
just had so many stories. I mean, we could go on for ages in terms of all the stories.
I don't want to turn anyone off property, but it's, look, I mean, this stuff is inevitable. And the thing is, like, the more you buy, the more you own, the more likely this stuff happens.
Yeah, it's just
it's just
probability.
maths, right?
Yeah.
But I think probably one of the biggest, coming back to your original question, Grace, probably one of the biggest challenges I see people deal with, including myself, is as you're coming up through that journey of building your initial portfolio that gets you to, passive income or quit your job or whatever it may be, the noise around you is mostly negative. So, people you look up to, people like your family, your friends, your colleagues, or, even so-called property experts, they'll tell you you're doing the wrong thing. They'll tell you this and that. You listen to the news, it's doom and gloom and property's going to crash. And like buying every property is a lot of money. We talked about this just now. Starting point nowadays is about 70 to 100 grand. For any young person, that takes years to save up, and to be able to commit themselves mentally to put that kind of money down over and over and over again, especially with all the white noise around you. I think that's probably one of the things that a lot of people find hard to get over.
This feels like a very safe space. We've talked already about, breaking down taboos, and it is hard, as you've mentioned, to be out there talking to people who probably don't want to even, in Australia, no one likes talking about their salary. No one likes talking about how much their house costs unless, we don't even really talk about windfalls or losses. It's not something that people really talk about. And that's why I feel like this is such a cool, just a cool safe space, Property Unfiltered, to be giving those real life perspectives of what's going on. Back to mindset, because you've now talked about having a really strong why and how important that was. Have either of your mindsets changed or shifted over the years? And if so, how and why?
I mean, for me, it's like I'm not as like looking at the short-term goals nowadays. I'm more focused on the sort of broader perspectives. And I think a lot of it has come to do with my personal sort of life changes as well. I've got young kids and, they go to good schools and all this kind of stuff. And I think a lot of what I'm experiencing now in life has been the result of me making those kinds of sacrifices or the delayed gratification from the early days. Because we make it sound like we buy all these properties one after the other, but the truth of it is it's a lot of compromise. As you're growing up, or through your 20s, where most people just go party and travel and all that kind of stuff. And I did some of that, but definitely not to the extent of what many do. So now I think it's just about me kind of smelling the roses a bit. Like realizing I'm in a space where not only, personally I'm quite comfortable, but also, and again, as cliche as this sounds, seeing other people get themselves to that point is extremely rewarding, because I know what they're going through. I've been through it firsthand. So seeing them, whether it's a client or whether it's any other investor, buy one property after another and build that portfolio, to the point where they're giving me advice, giving me tips as well. I think that's something if you want to talk about like, any kind of legacy or anything you want to leave behind, I think that's a very powerful thing. So my mindset has changed in the sense that I guess I'm a little bit more, just a little bit more not as crazy ambitious and keep building and buying more properties. for myself. Yeah.
It's a long game.
Yeah, long game. That's
And
it.
you've clearly swapped out that serotonin boost from your own purchases
Yeah.
into the people that you work with.
Serotonin boost? Yeah, probably.
You're still getting
Probably.
that hit. You're getting that hit.
Yeah. The houses don't do anything for me anymore.
Michael.
In terms of mindset shifts, I'll like comparing to when I first started to when I was building the property portfolio, it would just be a lot of it. I'll have to actually thank my mentor, Rolf. So you would think that someone mentoring you in mortgage broking will send you mortgage broking books or taking you through, you know, how to be a mortgage broker. But it was actually a lot of the self-help books that he sent me. They changed a lot of things. And I remember in the early days, he would just always correct me on my self-talk. So we'll be chatting on Skype and I'll be like, oh, maybe one day I'll be a good mortgage broker. And he'll actually do a strike through across maybe and say, you will be a good mortgage broker. And in the beginning, those things you don't realize. But then over time, as you see it more, your self-talk improves and then it just kind of leads into other things. So I would say compared to where I had come from, the self-talk, just in terms of general mindset, is a lot healthier and is because of those books and because of my mentor, Rolf.
And it worked because now you're ranked 37th in Australia as a broker. So that's incredible.
Yeah, I mean, people say a lot of those things are airy-fairy, but there is truth in a lot of it.
Yeah. Building the mindset, instilling the truths, like it does work.
And you guys are living proof. I'm curious how, well, you've obviously got a very good personal relationship between the two of you. Professionally, I know that you both work together now. How has that, the relationship, you know, morphed, evolved, changed over the years as you have, you know, gone further in your own property journeys, but then also taken on these new careers?
Well, I mean, he's still my broker, for one. So I still hit him up for annoying questions about what I can do with my equity or interest rates or whatever.
Where do you draw the line? You know, between being friends, being professional colleagues. Like, how does it actually work?
I think it's all in everything we talk about is positive. You know, it's all about. I think it's all kind of melded together, if that's a word. I don't think it is, but anyway.
But I think also just in terms of life stage, it's very similar. Simon has 2 little ones.
Yeah.
I've got 2 little ones, similar ages.
Yeah.
Yeah.
And we hang out. You know, our wives hang out as well.
Yeah.
And we talk shop. We talk. You know, we have a lot of mutual clients as well. So I think
Mutual friends that have become friends too that we hang out
yeah,
with. Yeah.
Yeah. 100%. Like, you know, from the very get-go, we started. You know, he'd send a few my way, I'd send him a few his way, and you know, we see those portfolios or those clients blossom into serious investors. So I think, definitely a lot of pride there as well for the both of us. You know, to help people grow.
And I think it's also that that saying that they say that you're the average of the 5 people that you surround yourself with, and it's more almost just a natural transition that over time, as we become more invested in the property space, that more and more of our closer friends are also into property. So that's also made things a bit easier too.
Yeah,
because
correct.
now it's not seemed as when we were first starting, it's just something that was so abnormal that you're getting into. Now it just feels like the norm. Like it is normal to have 10 properties. Like it's not something that's completely unachievable.
How many are you on now?
I'm over 60.
Over 60 properties. It's crazy.
Obviously snowboard since 2013.
He's still getting his serotonin hit from these houses.
You're not doing other people's. You're still wanting your own.
That's right.
And what about you, Simon? Where are you at?
I think 24.
Yeah.
From last count. So not as crazy. But yeah, well, you know, it's a marathon, not a race, Michael.
I can see the competitive spirit between you right now. Any plans on getting up to that 60 point?
Yes, and Michael is being very instrumental as part of that process now because he's pulling out a lot of equity from the houses that I have, and I'm going to be chasing.
I was going to say there's no espionage, there's no like little secret.
No, it's actually. I mean, like we constantly share what kind of asset classes where we're buying.
100%. Yeah.
Do you do any together?
No.
We did do one together.
Oh yeah, we did actually. Yes.
We did
Did a little development in Logan. a couple of years ago.
With another friend/client.
Yeah.
Yeah.
And some lessons learnt, put it that way.
I mean, this is Property Unfiltered. Share.
It was, look, it was, we were thinking, I was going to make a lot of money, this and that, and it was going to be pretty smooth. In fairness, it was quite smooth. There wasn't too many hiccups because this other mutual friend we have, he's kind of like an expert when it comes to
He's a town planner.
Town planning and developing and stuff. So he actually did a lot of the work, which I was really grateful for. But you know, when it came time to sell the blocks, we cut up one block into 3, so it wasn't a massive development or anything. But then when we came down to sell it, you know, we made a little bit of money on it, but really nothing to write home about. And for me, actually, that was a very important lesson. And the lesson was, like, if you're going to develop, do it properly. You know, don't go for the little subdivisions. Don't go for the little 3 lots. You know, don't go for the tiny, you know, $400,000 site. You know, you want to do it properly, maybe 10 lots or like a proper capital spend on it, so that at the end of it, whatever happens, you pocket more, right? The amount of work, the amount of effort, the amount of research that you do on any site is quite similar. It's just a different dollar amount. So get yourself to a point where you have enough funds or enough capital to pursue a proper project. And this is, you know, going on a bit of a tangent here, but this is one of the things I always talk to clients about, because they say, oh, you know, I want to buy a subdivision site. I want to buy something with development potential. And I'm like, what's your goal? Is it to build it immediately, or is it to, you know, sit on it and park on it until you know, 10 years later? Because when you buy that development site today, almost certainly you're going to get a pretty old, crappy house that may have its own issues when it comes to renting, or maybe the site is not really feasible enough to make you money. I think a lot of people, again, romanticize about, oh, I want to be a developer. That's how people make a lot of money. But it's, you know, if it was easy, everyone would be doing it, obviously. So no, that was one property that we did, and, you know, we sold it, and kind of, yeah, a few lessons learned. Did you learn anything out of that?
Yeah, no, it was actually really good. And I use it as an example when I speak to my clients too, because, like, in a nutshell, so there was the 3 of us. There was a broker, there was a buyer's agent, and there was a town planner going into a 1 into 3 subdivision.
3 men walk into a bar.
Yeah, that's what I was thinking, actually, when you were saying that.
So you think the chances of success would be quite good, but I think, yeah, after everything, and if you just count the opportunity cost of the money tied in there, I think we went backwards.
Yeah.
But the main lesson for me is it's not that easy. Like, you can't just go into it. Like, to be frank, I did very little work in the entire project.
I think what killed it was that we had to build an electric pole at the end. So, you know,
everything just cost money.
Yeah, when we were trying to get it, like, certified or whatever it is, like, right at the end, you know, council came around and said, no, you can't use the existing one in the street. You got to build your own, those, you know, wooden electric poles. I don't know how much you think, you know, they're worth, but I think they're like, we paid like 50 grand or 60 grand for it, for a pole. And I remember making a joke, can I have like a USB thing at the bottom that I can at least charge my phone in when I'm in the area, since I'm paying 50 grand for this thing.
But even other things, just like plants that we had to plant.
Yeah.
And they costed more. Just everything was.
Yeah.
And I think because also there wasn't one key driver. It was the 3 of us, and we were just kind of like letting this project kind of just go on. So I think the lessons were, for me, if we were going to do something like this, we have to take it a bit more seriously. And then also, it's not that easy. Like, you can't just buy a site that's 1 into 2 and expect to make a lot of money. Because if it was that easy, everyone else would be doing it too.
Yeah. And I think having everyone on the same page as goals as well. So having like a clear exit strategy, I think, is super important. I think we were kind of just thinking, oh, you know, we'll do it first and see what the market's like, and if it's good, we'll sell it. If it's not, this and that. So
yeah, what was actually the killer for the overall thing was me and Simon quickly sold our blocks and moved the money into crypto. So that was so that made the project worse.
Yeah, correct.
I mean, crypto, we could go on for days about that. But
No, that'll
given
be a
this
different
is
show.
Property Unfiltered, let's stick around here.
Yeah.
I mean, even just the cringe that you've kind of got going on at the moment, Michael, for everyone who is listening along, there's definitely some shoulders up near the ears.
Is there?
At this point. But yeah, that's just so cool. Obviously, working together didn't quite work that way, but you were mentioning before even the fact that you share a lot of clients and that's got to be a win.
Yeah, 100%. Like, I think, look, I've got no hesitation whenever one of my clients go out, do you have a broker that you would recommend? And I'm like, who better than the person that has been alongside me building this entire portfolio, not only from a personal perspective, but honestly, in the world of property, your broker is the most important person, right? Probably more important than a buyer's agent, probably. But the bottom line is, if you can't borrow money, you can't buy.
Yeah.
And any broker can go out and get a loan for your next house, especially if you're just starting out. But when you're 5, 6, 7 properties deep on $100,000 salary, you need someone that will structure it properly, take advantage of certain products and banks that are doing whatever they're doing at that particular point in time, take advantage of different types of banks, different types of lenders, not just the big four or even second tier or anything like that. And, I think the bottom line is, like, whoever you end up working with, just make sure they've achieved what you're looking to achieve, right? Because, that first-hand experience or going through that journey yourself, you're a lot better equipped to be able to pass that, information or that strategy or that focus onto someone else, So that's why I feel like we work quite well together.
100%.
So then when you are talking about, the work being done by your clients, how often do you go back, Michael, to Simon and go, can we actually do this for this person? What are there cool ways of being able to work when you do work so closely?
Well, most of my buyers come to me and say, we want $100K passive income, right? So we work backwards from there and go, cool, $100,000 is $2,000 a week. One property will get you 500, so you're going to need 4 houses fully paid off. 4 houses fully paid off typically means you need to go for 8 to 10 over time. And as you accumulate, you'll have the opportunity to sell some and then pay off some. And slowly you'll end up with hopefully 3 or 4 houses fully paid off over that 10 years. So really, if you need to buy 10 houses in 10 years, that's 1 a year. So then when we go, obviously, Michael might run through that scenario with the client and go, okay, cool. You can't plan 10 years out. Right, the world was a completely different place 12 months ago, let alone 10 years. But at least with that goal in mind, you can start to think, okay, cool, how am I going to successfully finance one property every year consistently based on my salary, based on my finances, based on my risk appetite? And then I guess conjunctly, I'll be thinking, okay, what type of properties do we need to buy to get you to buy one property every year? And it comes back to a lot of the stuff that I keep talking about for the past 8 years, 9 years that I've been doing this. It is about getting good deals. It is about getting bargains so that you can pull equity out, buy the next one, keeping an eye on cash flow, making sure it's all positive so that you can keep financing. And I think, having that kind of good broker / buyer's agent relationship really helps unmuddy the water, if that makes sense.
Nodding along there, Michael.
Yeah.
Complete agreement.
Well, in terms of the process on how we work, I think it's fairly seamless. Simon sticks in terms of his lane on finding the properties. So for a mutual client, I'll do the modelling, and then just based on their borrowing capacity, on their resources, how many properties that they can get up to. And then I'll generally model it based on a certain price bracket. And I know generally the price brackets that Simon plays in.
About 400 to 600K, yeah.
Yeah, and then I'll feed that back, and then Simon will be like, okay, then this is what we start out with. But sometimes, like for the first property to the client to then when they end up at 7, 8, 9 properties, it could then look quite different.
Yeah.
So I think in that process, it's fairly fluid too. Aside from that, we're just chatting on a daily, weekly basis in terms of how's the finance coming along. Is there any issues with building and pests and those types of things?
To be fair as well, like we've done this so much.
Yeah.
It's like, it's just second nature. We don't really kind of need to have too much conversation about, it's like, okay, cool. What's the equity like? Okay, cool. Let's go. Next one. And then, okay, is the finance approved? Is it unconditional? It's just very, very fluid,
Yeah, I think we trust each other in terms of what we do, that we just let each other just do that. So,
yeah, totally.
Yeah. I mean, speaking of the clients and the success that you're clearly having, one cool part about Property Unfiltered and what you're looking to do with this show is highlight and showcase some of the cool portfolios out there and what you've been able to achieve, what other people have been able to achieve in their investment journey. And I do believe you come armed with something today.
Yeah, we've got a lot of mutual clients, so I thought it'd be good to share a little bit about a particular client. We've been buying property for not much longer than a year. You know, they bought their very first property in at the end of 2021, and right up until the end-ish of 2022, they ended up with 8 properties.
Whew.
Yeah, one after the other. So it was a mixture of buying what we talk about or what we do at House Finder, which is buying, you know, below market and buying bargain deals and good cash flow and so on. And coupled with, obviously, you know, having Michael as the mortgage broker, he was able to constantly pull out the equity from each purchase, you know, for us to buy more and more and more and more. So if I look down at some of these, I mean, I won't share his name or addresses or anything like that, but, you know, properties in Queensland, I can see that we bought 3 or 4 properties actually 4 properties in Queensland and 3 properties in WA.
Mm-hmm.
You know, most of these houses were around about the sort of 340, 350K mark when we paid for them about, you know, 1.5 years ago. And most of them have an equity position currently of around about $140,000 each.
Wow.
So if we times that by 8, like this particular client has a total equity position of over $1 million, you know, in the space of buying property for less than a year. So, you know, if he really wanted to, he could probably consolidate his debt a bit now and sell down have a few paid off, and he'd have a chunk of passive income coming in that, you know, might enable him to work or not work or work part-time or, you know, whatever he wants. I guess that's ultimately what financial freedom is all about. So, you know, that's I think it's a really, really good thing to or a really good case study to talk about, because, you know, one of the things that I get constantly, and Michael as well, is, you know, is it still possible to do that nowadays from back when we did it? I mean, this particular client, he's on a higher income. He's not on a super high income, you know, fairly kind of average sort of family with young kids, and he's also in his 40s as well. So a very sort of typical situation for a property investor. And if you can build, he's actually got more properties than 8. He went 8 through us. But if he is able to build a portfolio that quickly and get that amount of equity quite quickly, I think it's you basically replicate what we did is what he's doing right now.
What was his plan? What was his mindset coming to you?
It was always going to be passive income to quit his job. I don't think he wants to stop at this point in time. So, you know, when we first sat down with him, he wanted to replace his income, which was around about the $200,000 mark. So I think he's kind of working his way towards that. There's been a slight delay in that journey because he recently bought a PPOR, or a house to live in.
Mm-hmm.
So, you know, once that's passed, I actually spoke to him yesterday. He's going to speak to you, Michael, to get some more equity out so we can keep going. And buy more properties. But no, you know, look, there's the houses that we bought. They're nothing fancy. They're nothing special. They serve a purpose, you know. And interestingly, these are the houses that typically grow the most as well. So, you know, as long as we keep going down this trajectory, I think he's going to get to his goals fairly quickly. If he can achieve $1 million worth of equity across all these properties in the space of less than a year, you know, who knows what can happen in the next 12 months. So excited to see that for sure.
I know when I was chatting to him when he first reached out, he had bought 3 properties in Sydney a little bit while ago and kind of just sat on them. And I think for a long period of time, he was just procrastinating, what do I do from here? And I think it might have been through property forums or podcasts that he reached out to Simon and also myself. And from a loan perspective, he knew that buying these types of properties would have been hard to propel him moving forward. Like, you can only go so far with 2 to 3% rental return. And then at that point in time, it was just the tail end of the Logan boom. In terms of the general public, there wasn't that many more good deals, but he kind of caught the tail end of it. So he took a leap of faith. And I think, like literally there was a period of time where he didn't have a week where we weren't having a loan get approved.
Yeah.
So it was literally just
Constant.
back to back. And it was almost like he hadn't seen the results of the properties, but he took that leap of faith from Simon and also myself that this would be the path to go down because he had knew our stories.
Yeah.
And it was lucky for him that he did it so quickly, because at the end of it, I still remember having conversations with him. He's like, oh man, like I would love to buy back in Crestmead. Oh, I would love to buy back in Beenleigh. But he had already moved 100, 200,000 in a space of 6 months. So that is a little bit of luck on his behalf, but he also took that leap of faith. And then after that, he then moved into Ipswich and then also WA. And I think the really cool thing about this story is I know the end goal of a lot of investors is to buy that principal place. And sometimes you need to sell down before then you can buy there. But I know in his case, we left a little bit of borrowing capacity, a little bit, by a lot I mean, but with a certain lender. And he managed to buy his PPOR that he had always wanted in Sydney in the school catchment for his kids that he wanted.
Wow.
Yeah.
So he kind of did it all in
Backwards.
Yeah.
Sideways.
Yeah.
That's a very
somehow.
good point. Like, most people go, oh, should I invest or should I buy a house to live in? Like, you can do both, honestly. It's, but it's, talk to a good broker. You definitely need one on your side to make it happen.
But the crazy thing is that was all within a year and a half.
Yeah.
And I remember chatting to him like, how far have we come in a year and a half?
It's insane.
Crazy. Yeah.
Like, and there's so many chats with him, so many like, oh, what do I do now? What's the next steps? And, that's a big part of it as well, like the ongoing mentoring and educating. It's not just about, hey, here's a house, see you later. Good luck with it.
Yeah.
I think really helping people achieve or go through that process, because, how many people can actually like motivate themselves every single week to send you updated credit card statements and bank statements and pay slips and this and that. Like, I do it once and I'm
the
like,
paperwork
exactly.
everywhere.
It was, yeah.
He almost should have just given you his bank details at that point.
pretty much. Here's my login details. You do it all.
But also, to be fair, it wasn't all smooth for him. Like, probably one of our worst experiences on a purchase happened with him. And I think for most clients, that would have been the end. They would have stopped. But I'll let Simon tell that story because you were closer to it with the selling agent.
Oh, right. Yeah. Okay, cool. So, this particular property that we bought, I think around about the 6th or 7th month mark later, it experienced a pretty big structural issue, a structural defect, where one of the beams for the property eroded, and for the roof eroded, and the roof was at risk of collapsing. Right, so it was deemed unsafe. The tenant had to get out, this and that, and it was a problem that we're still in the process of trying to rectify, because we're trying to pin it back to the building and pest guy that did the original inspection, but because it happened so far after the purchase, it was it's debatable whether it happened, the problem existed before we bought the property or after the property. So, very jarring experience for anybody, to have a house that is looking at a complete roof replacement, or, maybe even the prospects of not getting like a rental income for this particular house. But we paid $297,000 for this house, and just because of the organic growth that has happened, there's still equity in it, even though it's uninhabitable, technically. so we're kind of like, it's a problem, but it's not like the worst problem, because I don't even if he was to sell the house as is now, he'd walk away with with a bit of a profit, right?
Correct.
So I guess trying to put that into context to a person that's going through it is not the easiest thing, but at the very least, it's not all red, if that makes sense.
Well, the funny thing is, so the example I was thinking of was another one. So he's gone through 2 headaches. So the other one is we were buying this property, and generally at settlement, if you don't make settlement, which is unfortunately fairly common, is the other side will just allow you to extend by a couple of days, which is a norm. But on this property, unfortunately, we missed settlement, I think, by 2 days. And this had been before the laws had changed in Queensland. Basically, the seller pulled it from us and he lost his deposit. Everything.
Oh, right. Yes, I remember that as well.
Yeah.
Yes, correct.
Yeah, and in all of our time of doing this was the first time that it had happened to both of us. And we're like just shocked.
But I think we got it back.
We did get it back, but at the time he had his entire deposit taken from him.
Yeah.
And the property.
Yeah.
And imagine breaking that to him.
Yeah. He was cool about it though.
Oh, I know, but for most people,
like,
they
man,
would
this
have like,
sucks.
yeah.
I think it was because that we were just like fully on deck to help him whatever it takes to get this money back.
Yeah.
And we did through the, if I remember correctly, through the lawyer,
solicitor, yeah.
Through the
correct.
solicitor, we managed to claw it back.
Yeah.
And he wasn't at a loss at all.
Yeah.
But, you know, a lot of things happen like that in property. Like when you're going through something, whether it's settlement issues or a big, massive maintenance issue, you might find that it's like intensely, nerve-wracking. But give it time, you know, you'll probably end up with not only minimal losses, because you might get it back in the form of like a solicitor getting that money back for him, or maybe in the case of a massive maintenance issue, it might come back in the form of an insurance claim. So, you know, and I guess the main overarching thing is like as these things happen over time, as you're building your portfolio, you're going to look back and think, man, it was just like, why did I even bother worrying about that particular problem? I mean, these houses have made hundreds of thousands of dollars, you know, and I'm in a place where I am now because of that. Yes, I had to go through maintenance. Yes, I've got to go through tenancy issues. Yes, I've got to go through finance issues and, you know, this and that over time. But, you know, you kind of look back and go, okay, that was actually part of the journey, because what people don't realize is the more they experience that, the more they get desensitized. Maybe that's not the right word, desensitized, but the more you get used to it and you kind of just...
You've got to build up that resilience.
Yeah, you build up the resilience,
is the right word.
absolutely.
Yep.
And, you know, that's how you grow as an investor, and that's how you can take on bigger and better things. I mean, if you give any investor 60 properties tomorrow, you know, from zero, I'm not sure if they'd be able to handle it, to be honest. Like, it's the systems and the people you have in place over time.
Constant headaches. Like, yeah.
So that's what we call the property journey. You know, you have to go through it. It's like a rite of passage to get yourself to that point.
Everyone has their origin story.
Yeah, totally. But no, yeah, it's been really good first episode, you know, for this particular chat. So
Awesome.
yeah.
Yeah, you've set the bar pretty high for what the rest of the episodes will sound like. I'm very, very excited to see what comes next. Michael, Simon, thank you so much for taking the time today.
No worries.
Thank you.
Look forward to the next one.
So how can people actually get in touch with you, Simon, if they're interested to hear more beyond hearing about the next episodes?
Oh, you know, just contact me, you know, on my website, I guess, housefinder.com.au, or you can just email me directly, you know, simon@housefinder.com.au. So yeah.
And we can also pass along some questions there, editor@smartpropertyinvestment.com.au. That is all we have time for today. If you liked this episode, make sure to review us on whatever platform that you do listen to your podcasts on. Expect some pretty cool stuff down the track, I think. So this is going to be a very awesome one. Until next time, stay safe and well wherever you're listening from. Bye-bye.
Bye, guys.
Bye.